There we go. Now we got the webcam working. How we doing, everybody? Welcome to the Friday edition of the Premarket Prep on this fine December 15th, 2023 day. I'm your host, Adam Holland here. We got the tree in the background. We got too much sunlight coming through, but I won't complain. Means we got a nice, beautiful day on our hands. Let me see here. I'm going to dive into what we got going on today. Yesterday was a beautifully profitable day, right? The type of day that you want to end the week off on. That's exactly why I will not feel forced to force anything today. Today is an OPEX day, right? Option expiration. We've got a number of different, financial tools, derivatives, etc., that are expiring today. So you can get a lot of weird movement, a lot of chop, a lot of volatility. A lot of people don't even trade the whole OPEX week. But at the least, I just try and focus on, okay, if we get some weird movement on OPEX Friday. So the main thing I'm looking at is weekly closes here, weekly closes for some beautiful swing plays that we have either already in place or we're just trying to make sure that they get the closes that they need. So that's the big focus as we head into today. We're trying to do one thing, that's so make sure you drop that one in the chat, signifying your intention, your active intention, your stated intention to get 1% better by the end of the session and the end of the day. That makes it an incredible Friday, one where you earned the weekend. Now, in terms of top news, deficit target, as China's economy continues to falter, Beijing is expected to run a budget deficit of 3% of its gross domestic product next year, lower than the revised 3.8% target for 2023, with the aim of maintaining fiscal discipline. Its economic growth target is around 5% in 2024. The targets were drafted, excuse me, were drafted by President Xi Jinping and other officials during the Central Economic Workforce and will be announced publicly at China's annual parliament meeting in March. Off-budget debt, other fiscal support and expenditures may be covered by off-budget sovereign debt, including a potential special sovereign bond issuance amounting to 1 trillion yuan, which is around $140.72 billion. Special bonds, which are not included in China's annual budget, are used to raise funds for projects or policy goals when needed. The bond quota for local governments could be around 4 trillion yuan next year compared to this year's 3.8 trillion yuan. The leaders agreed to implement a proactive fiscal policy and step up efforts to maintain sufficient liquidity in line with economic growth targets. They agreed that financial institutions should be guided to scale up support for scientific and technological innovation. In addition, overall financing costs must steadily drop while the RMB exchange rate is maintained at a reasonable level. So, in terms of the bigger picture, China's Politburo recently said fiscal policy must be moderately strengthened in the wake of the post-pandemic economic slowdown. The country's fiscal position has been under threat, with Moody's downgrading its government credit ratings, as its government will likely have to bail out financially stressed local governments and state-owned enterprises, as well as tame its property crisis. Even so, FTSE Russell sees opportunity in investing in China, as it's, quote, undergoing a transformational period to maintain sustainable growth after years of rapid expansion. So China's in a tough spot, but they're looking to try and wiggle themselves out of it. That's pretty much what all this means. It's a bunch of financial jargon for them trying to figure out what the heck they're going to do. They've been underperforming. And they haven't been doing much in order to address that, right? We've been, increasing rates and all that stuff, and they've been in a much worse spot and much more dire straits. But that doesn't mean that there's not still opportunity to be found there. There's a Chinese stock in particular that has caught my eye. There are a few that are eye-catching. You just need to see them start to show some impetus, right? Show some chutzpah and get on the move, and then it's like, okay, it might be time to go ahead and take a dive on the wild side and maybe dip back into some Chinese stocks. But as of right now, when you've got all these beautiful American blue chips that I don't have to worry about the president waking up and outlawing that whole sector, I'm going to make sure that my money's there rather than somewhere where you could wake up and, there's suddenly gaming restrictions on every person, every citizen. They have 3 hours a week, or they wipe out the for-profit tutoring industry, right? All that can happen overnight and you're just straight out of luck. In terms of central banking news, too soon. While traders around the world cheered the Federal Reserve's dovish pivot and bet on interest rate cuts starting earlier than expected, European central banks and the International Monetary Fund's chief have cautioned against jumping the gun in the battle against high inflation. Quote, sometimes countries prematurely declare victory and then inflation gets more entrenched and the fight becomes harder, warned IMF Managing Director Kristalina Georgieva, a day after the Fed has left its key policy rate unchanged. The European Central Bank and Bank of England did the same, although both central banks pushed back against rate cut talk. But many believe the Fed has now set the tone, making it harder for other major central banks to remain hawkish. Yeah, I mean, that's how it goes, really. The U.S. Central Bank is the trendsetter, right? The ones that started hiking, and then banks began hiking us, and then once we start, kind of slowing down the hikes or reducing the hikes, right, taking them back, walking them back, other countries will start to do that as well. Are they at a point where they are, they should do that? I don't know, right? The Bank of England, European Central Bank, don't know yet if they're at the point where they should be doing that. Don't know yet if we're at the point where we should be doing that, but we're going to find out. So all these too soon fears and speculations, we really just got to wait and see, right? But in the meantime, take advantage of the sentiment that is, rates getting rolled back. We talked about this in last night's Q&A. What sectors take off as a result of interest rates being decreased? That's where you need to focus your attention, hop in the long swings, and make sure that you're executing. In terms of healthcare news, Medicare crackdown. The Biden administration named 48 Medicare Part B drugs that could be subject to inflation penalties for Q1 2024, including products from the likes of AbbVie, Amgen, and Pfizer. The initiative, introduced as part of President Joe Biden's Inflation Reduction Act, aims to cut out-of-pocket expenses for Medicare members and discourage drug makers from raising prices faster than inflation. To note, prices of 64 drugs have risen faster than inflation over the past 4 quarters. Meanwhile, Senator Elizabeth Warren and Representative Pramila Jayapal accused drug makers such as AstraZeneca, to raise the end, of driving up drug prices by making sham claims to patients. It's spelled patents here, but I think they mean patients. In terms of media, activists fight. Activist investor Trian Fund has nominated 2 members to Disney's board, including the hedge fund's founder, Nelson Peltz, and the media giants, amid the media giants' ongoing struggles. The other nominee is former Disney CFO James Russolo. The root cause, quote, the root cause of Disney's underperformance is a board that is too closely connected to a long-tenured CEO and too disconnected from shareholders' interests, said Trian, which owns $3 billion worth of Disney stock. Disney defended its current board, but said it would review Trian's nominees. Peltz previously tried to run for a seat on Disney's board, but withdrew his nomination after Disney announced major cost cuts. However, its shares dropped nearly 20% since Peltz ended his proxy fight, and Seeking Alpha analyst Ironside Research has since moved to the sidelines. So Disney just embroiled in this battle between the old Reich and the new Reich. And, activist investors are annoying. They can be tough. They can, cause a lot of headache, but Disney does have to change something. I think they recognize that, and that's just what this activist investor wants to get done. They feel like Disney might be out of touch with what's going on, still attached to Bob Iger, but Bob Iger was also responsible for, making Disney what it is today. So it's something that I wish they'd make a show on, a documentary on. That would be fun, like Succession, but for Disney, right? Fight for the Mouse House, Battle of the Mouse House, something like that. I'd watch. In terms of today's markets, mixed bag here, but I think a lot has changed since this newsletter dropped. It looks like at first SPY was up. Now SPY is definitely looking to open red, which, again, is of no real consequence to us. In terms of today's economic calendar, nothing really going on. 9:45, we get PMI composite flash data. So that's small thing. Maybe if at 9:45 you see some volatility that, you just want to say, okay, that was a piece of data that came out. But in terms of what else is happening, we got our rapid fire stock news rundown here. Global oil demand will slow next year amid macro weakness. Costco, ticker COST, tops profit estimates, will dole out special dividends. World Health Organization calls for ban on flavored e-cigarettes to reduce their appeal. Retail sales unexpectedly rise in November amid holiday season. Tesla bags incentives worth $153 million for Mexico Gigafactory. Intel, ticker INTC, unveils AI offerings as semiconductor index hits record. Watch Hess as Venezuela, Guyana won't use force in border feud. Global Payments, ticker GPN, denies acquisition talks with Shift4, whose ticker is FOUR. GM's Cruise autonomous vehicles unit slashes 900 jobs. Deadpool and Ghostbusters among most anticipated movies of 2024. I'm very excited to see Deadpool. Big Marvel fan, big Ryan Reynolds fan, both as an actor and also just as an investor, as a venture capitalist. He's pretty dope. I mean, the way that he just operates in all sectors. He's in professional sports, right? He's in literally everything. The wine and spirits industry. The guy crushes it. So I'm happy to see Deadpool. Happy to support. But other than that, guys, listen, it's Friday, right? Like I said, it's OPEX day. We've got a lot of options that expire today. We've got $1 trillion worth of options that expire today. So you can get a lot of movement, a lot of people closing positions, rolling them out into, further expiration. You can get a lot of up, a lot of down, a lot of chop, right? So don't give back what we made yesterday. Don't give back what you made this week. There's no reason to go hard on Friday, especially when it's a Friday where you might not get price action that allows you to do so. So focus on those weekly closes. Make sure you're aware of what we need and where we need to close in order to take those long swing positions and take them, right? Because they pay. Citigroup, SoFi, right? Tesla. There's a number of them right now that we're in. They're doing their job and accruing that value over time. And sometimes long swings you only need to be in them a few days, right? Look at what Citigroup did this week. Look what Bank of America, SoFi did this week. You could take profit on those, and you've got months on them, and it's only been a few days. So make sure that especially if you're starting out, you're focusing on those swings, getting to a point where that is, what your kind of the crux of your trading activity is, and then you can worry about day trading and all that good stuff later. But everybody have a great weekend. Have a safe weekend. I'll see you back here on Monday for our next pre-market prep session. Have a good one.